In the beginning of this year, I made a video around NIO and profitability. I said there is actually a small likelihood that they may be able to print a profitable quarter by the end of this year. So let's revisit this idea and see whether or not Q4 may actually be even the first quarter in which NIO shows a profitability, because there is actually some interesting news from the NIO management themselves. A couple of days ago, the co-founder and president of NIO, he gave a speech in which he actually also talked about profitability. He mentioned that NIO's gross profit from selling cars is enough to cover marketing and administrative expenses, but not R&D expenses. And this one is interesting, adding that NIO can just stop investing in R&D if it wants to be profitable. But obviously it cannot do that in the early stages of a company. So that's an interesting point. From the management perspective, they're saying that they're operationally profitable right now by just selling the cars, how they're doing it in this current volume. Plus, if they just stop investing in research and development, then they would actually already be able to print a profitable quarter. But it seems like the company's strategy is quite different, because they see a bigger picture, a long track in which they want to continually invest. And what we've seen also is that they've invested heavily recently in infrastructure, mainly the battery swapping stations, which have now hit more than 700 stations. But also supercharging, NIO houses, NIO spaces, and all of this, basically reinvesting all of the money, all of the cash flow for which NIO has continued rising and bigger cash flows coming in, that they kind of used to reinvest first, then pay off the liabilities, and second, well, what's coming to the bottom line currently is not sufficient for a profitable quarter. Now, talking about research and development, it's interesting to see how much NIO has spent this year actually. And I will highlight it here in yellow. So the actual numbers for Q1, the actual numbers for Q2, and the actual numbers for Q3 together come to 426 million that have been spent on R&D this year so far. And if I remember correctly, there was actually an official goal of spending 500 million of R&D this year. So subtracting that, this would only leave 74 million to be spent on R&D by this year, meaning that NIO is currently overspending on research and development. That may have to do with the launch of the ET7, the newer models, the ET5, maybe Project Gemini. Who knows what they are working on? We'll know by the end of the week with NIO Day what exactly they come up with. But I know that in the final stages before releasing the cars, of course, you need to go through all of the testing. And also they have an entirely new platform, the NT 2.0 platform, which they're launching this time. Plus also what they are investing for building up the new production capabilities. And so all of this seems that NIO is currently investing more in R&D than they actually planned to do, which in one way I think is actually good news, because that's actually what you would like to see as an investor in an early stage company, that they continue to improve their R&D and come up with new products, new value propositions, which they can kind of cash in later on once all of this becomes a cash cow. But in the earlier stages, it's not too important, is it? On the other hand, what could be an optionality here is that maybe they have spent most of the planned budget already in the first half of the year and, well, in Q3, and maybe planning on spending less, so closer to the 70 million or 100 million by this quarter, which would be severely less so than in the first quarters. Maybe most of the R&D has already been started in the beginning of the year, and that would actually also increase the profitability by this quarter already. And if you see that the net loss in Q3 was actually 130 million, while they spent 185 million, you see that if they cut the R&D to zero, basically, which would be something very unlikely to happen, but then this would already print a profitable quarter. But just by looking at these numbers and also what the management have said, it seems quite unlikely that they want to suddenly stop this R&D investment. And so it seems it's much more likely that profitability will actually happen possibly next year when the volume is even higher. And also, well, the question is whether or not they will actually show just a very tiny profit and continue in a kind of a sense of a Amazon-like of a business in which you have very high cash flows coming in all of the time, but almost no net profit because you kind of reinvest everything into the growing business because you have such a high return on invested capital. And so that seems to be the main goal here by the management. But of course, this would also be very important for the stock price ultimately. Let's see what happened to Tesla in Q3 2018 when they broke even and how this translated into the stock price performance. So here you see the long-term chart for Tesla, and as you can see, it has been bouncing around $35 up to $50 for quite a long time, breaking out occasionally to up to $76, but then even retesting in the Q1 of 2019 the very lows before it finally lifted off. And I remember this period being invested in Tesla just as it was yesterday. It was really a worrisome time, even though like during this time Tesla broke even, so meaning they printed their first profitable quarters and operationally the company got better and better, but still there was so much FUD, fear, uncertainty and doubt articles around it, and it took a couple of more quarters to basically show that this company can continuously show profits. After Q1 and Q2 2019 once again showed a net loss, to really then instill the confidence for the investors believing in the long-term growth story and the high projections for Tesla. And of course, I don't need to tell you what happened next. We had this wonderful rally in Tesla's stock, and I would argue that this big rally was of course triggered by the profitability, but of course it also took some time for the investors and for the stockholders and the shareholders to digest the profitability of this company and the projections going forward to really show this big rally. Anyways, I think also for NIO's case, it would be, of course, very good for the stock to show the profitability. I think on an operational level, we see that the numbers are there for actually breaking even already with those low volumes right now, much more higher likely so by the larger volumes to see by the next year. And then it really depends on how the management is kind of dialing those profits in and out, how much they're gonna do for reinvesting it. But anyways, I think that's going to be the story for the next 1, 2, 3 years on the fundamental side. I'm excited for your opinions and also excited about what we'll see on NIO Day by the end of the week. Of course, I will make a live stream here. And then thank you guys for watching and see you in the next one.